Hey, what's up, everybody? How you doing? This is Tuck Notes. This is Tuck Notes Beginner Stock Talk, where the beginners learn, like me, and we learn, and then we tell all of our other friends that are trying to learn. Ideally, in a nice world, but I don't know if that exists. Just a way to break the beginning of how are you guys doing? We're going to be going into part 3 of the Wyckoff, Richard Wyckoff's schematic approach to attacking basically the stock market and working around it. And so part 3 is titled Accumulation, and accumulation, we'll get into what that is, and then we're going to get into also, as I'm glad I read this before, some abbreviated terms, and you'll see those letters say I posted one time on Instagram recently, maybe some of you saw, I put LPSY, so we'll cover that, like, and things like that. So also be on the lookout, be a detective. If you see signs of like words or letters like that, maybe Elon Musk, I don't know, he would be definitely the cat to do something like that. But let's just jump into it, all right? So accumulation is a process. It's a process that in recent months, more and more people have been placing on the range or an asset. I wanted to debunk some of the myths around accumulation and provide you with an overview of what to look out for. By the way, I forgot to tell you, this is the article. It's a person, so I'm not trying to steal your information. I am just reading it again to other people. What is accumulation? Accumulation is a very specific process. Listen to this. Simply put, it is a process of accumulating an asset at a desired, usually cheapest price over a time period. So basically holding on to a Tesla at a low as long as you can. That's the An accumulation typically stops a downward trend as the composite operator begins the lengthy process of absorbing shares. This begins with the stopping action of the selling climax, or SC. The idea behind accumulation ranges is that these trendless ranges actually discourage traders who sell in order to move on to more active markets. The composite operator is using this opportunity to accumulate the relinquished assets. Wow, that's really some deep stuff right there. One objective of Wyckoff's method is to improve market timing when establishing a position in an anticipation of a coming move where a favorable reward or risk ratio exists. Trading ranges, or TRs, are places where the previous trend, up or down, has halted. There is a relative equilibrium between supply and demand. The institution and other large professional interests prepare for the next bull or bear campaign as they accumulate or distribute shares within the TR. Damn. Okay. How would you like to demonstrate how would you like to trade an accumulation range? How would you like to trade an accumulation range depends on your trading style. If you're a swing trader, you may want to play the moves between the labels. If you're a scalper, you have the boundaries established and can play within there. That's obviously an analogy. If you don't know what that means, a scalper is, oh wait, where is that? You know, if you're a swing trader, you may want to play the moves between the labels. I'm not sure what that means. If you're a scalper, you have the boundaries established, you can play within there. I kind of understand that because I've shown in the graph how there's kind of like a little rectangular support area between this number and that number is where is the support line. So, so let's clarify a couple of points that are often lost when people discuss accumulation as a process. Okay, wait, and they're just, it's not like a numbering thing, they're just bullets. Accumulation happens when an equilibrium has reached in price, where price stalls and begins to form a range. Accumulation can occur with greater accuracy and credibility on charts over 12 hours. That's probably important. Volume is the key indicator of accumulation and distribution. If you ever show me a Wyckoff chart without volume, you're doing it wrong. After a downtrend, we look for signs of accumulation or redistribution. Accumulation has a specific criteria that must be matched in order to add credibility to the range, right? Extra, you know what that means, I hope. So, there is a common accumulation schematic, and it offers a great visual cue to analyzing any potential ranges. Schematics are not meant as exact replicas to the way in which, you know, it's going to play out. You can't be exact with the stock market. That's impossible. Schematics are used to give a loose structure. It is up to you as the chartist to interpret and analyze the price action. As you may be now new to Wyckoff, I've copied the labels and the relevant information for you underneath. I'll show you what that is, give you guys the link to this, all that stuff. So we're going to go into what it means. So remember preliminary support, PS, or maybe I haven't said that one. It's where substantial buying begins to provide a pronounced support after a prolonged down move. So it's like this, and then you start seeing that. Volume increases and prices spread widens, signals that the down move may be approaching its end. Okay, that's kind of confusing, but we'll read it one more time. Volume increases and prices spread widens, signaling the down move of maybe approaching its end. Okay, so if it widens out and it gets less volume, it's an indicator that it might be ending. That's what it's saying. The SC, or the selling climax, right here, is the point at which widening spreads and selling pressure usually relaxes, or heavy or panicky selling by the public is being absorbed by large professional interested at or near the bottom. Often prices will close off the low in the SC, reflecting the buying by these large interests. That's pretty important. AR, which stands for automatic rally, which occurs because intense selling pressure has greatly diminished. A wave of buying easily pushes up. This is further fueled by the short coverings. I know that I'm not going to go there. The high of this rally will help define the upper boundary of the accumulation TR. We don't know what that is yet. The ST, or the secondary test, in which the price revisits the area of the selling climax to test the supply and demand balance at these levels. This is kind of highlighted right here. It is. If a bottom is to be confirmed, volume and price spread should be significantly diminished as the market approaches support in the area of the SC, selling climax. It is common to have multiple STs after a SC. So after you have your first one, the selling climax, and it's often that you might see a few more after that repeating itself, like we're seeing over and over and over again with Bitcoin. Test. Large operators always test the market for supply throughout a TR or ST and springs. We'll get into what that is. Okay, I don't know what it is either. And at the key points during key points during a price advantage. If the considerable supply emerges on a test, the market is often not ready to be marked up. A spring is often followed by one or more tests, a successful indicating that further price increases will follow. Typically makes a higher low on lesser volume. I know this sounds like a bunch of jargon, I know, but it really is important, and we're almost done. The spring test, I'll just read that again. A spring test is often followed by one or more tests, successful tests indicating that further prices increase will follow, typically making a higher low. Got it. And on lesser volume. SOS, signs of strength. Is a price advantage on increasing spread and relatively higher volume. Often a SOS takes place after a spring, validating the analyst's interpretation of that prior action. So SOS is pretty straightforward, signs of strength. And then here, LPS, last point of support. So I wrote an Instagram about that. Last point of support, the low point of a reaction or pullback after a SOS, backing up to an LPS means a pullback to support that was formerly resistant on the diminished spread and volume. Are you still awake? On some charts, there may be some more than one LPS, despite the ostensibility, singular precision of this term. I don't know what the hell I just said. Next one is BU, and that's not Malibu. Backup. This term is a shorthand for colorful metaphor coined by Robert Evans, one of the leading teachers of Wyckoff's method from the 1930s to 1960s. Evans analyzed the SOS to a jump across the creek of a price resistance, but the back up to the creek represented both short-term profit taking and a test for additional supply around the area of resistance. A backup is a common structural element preceding a more substantial price markup and can take on a variety of forms, including a pullback or a new TR at a higher level. I know it's a lot, but thank God you can rewind it. Regardless of the schematics, working perfectly to the diagram, you are looking for these signs of accumulation. The key areas to be aware of are: volume does not rise on demand. I knew it. Is there a good response to the sell-off? So if you got if Tesla goes up, but there's not a lot of people buying it, and you're like, what the hell? Then that's where we are. Or that's a key indicator that could be that. Is there a clear selling climax to begin your trading range? Is there an automatic reaction to that? And lastly, have there been any springs movements below the SC or the TR? How were they responded to? And lastly, this should be conducted at a minimum of a 24-hour chart. That's important. Here's a picture, guys, of what it looks like. I know it's backwards. Maybe it's not. I don't know. I'm not sure. But this is the beginning of a stock. I don't know what it is, but it shows a lot of patterns that can happen. And this is going over October 1 year. It's about 1.25 years. This is a little bit over a year, this graph. There's so much stuff that happens that we don't know. So this is kind of like art. Well, it's going to be my roadmap, my Thomas guide for that. So it says I've marked up this Bitcoin. Oh, so it's Bitcoin accumulation range so that you can see the labels on an example. No, and that will be difficult for you to see, but we'll try. Notice how this doesn't mirror the schematics, but it gives you a strong enough structure to work from. So right here, I know this is really lame, but there's the ST, this is the AR, and then we got a long line of stuff going on after that. I've marked up this Bitcoin accumulation range so that you can see the labels on an example. I already said this part. You can see that the interplay between the PSY, not marked up but represented by the horizontal line, and the AR test reacts on this chart. Also note the demand volume. After the selling climax, buying volume is largely in control, with the sell-offs managing the range and allowing the composite operator to accumulate more Bitcoin at a lower price levels as people leave the market. There are a range of accumulation schematics, some very well, other times you have to use your understanding of Wyckoff and the signals in order to form your own TR, which is the beginning of everything. Here is where you'll see what you're talking about. This is what I've shown you guys before. This is the Wyckoff schematics, events and phases. This is accumulation schematic number 1. This is accumulation schematic number 2. So they look almost identical, but they are different a little bit. And so you can see this is where you start, or this is where we're coming down, 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 down. And this is, I feel kind of like if you checked out Coinbase, this is what Coinbase kind of looks like right now. And I feel like Coinbase is somewhere around here. Or, yeah, I don't know. It's so confusing. I'm like, I'm on, this is over 20 minutes and there's probably no one that's going to listen to this entire thing. But there's different types of schematics of accumulation. You can see it go like this. They have a head and shoulder saucer. They have a cup and handle. They have a descending wedge and an ascending wedge. And then they have this weird big loop. I've seen all of these on the stock market lately. So a lot of misconceptions. This is the misconceptions. There are a lot of misconceptions around accumulation. So let's discuss some of these common sense, more common sense. Let's discuss some of the more common ones. The downtrend has stopped. The sideways action means we must be accumulating. Incorrect. A downward lane stops. That means we're going to start accumulating? No. Downward trend, the first thing is that it must be assessed. It is a possibility for a redistribution. Just because an asset has stopped or a downward trend or a downward move doesn't mean that it automatically becomes a case for accumulation. So I can demonstrate by showing you a Bitcoin just prior to the accumulation range that we identified. You may believe that because the downtrend was broken and retest that it becomes an accumulation process. Not true. The test was simply spent redistributing Bitcoin at higher prices before moving into our SC level, which began the true accumulation phase. Ooh, man, I'm getting excited. Don't be fooled by the simplicity of believing all downward trends automatically become accumulations. Don't be fooled by the simplicity of believing all downtrends automatically become accumulations. Look familiar? Tesla, Bitcoin, Ethereum, look how it runs out. It just keeps going, and with little like hints that you think you're gonna make some money, and then it goes away. Time to put your stop loss on there. This altcoin can't bottom out. It must be accumulation. Incorrect. Just because something has bottomed out doesn't mean it has entered accumulation. How do you know the prices increase are not being used as a means to redistribute leftover coins? I don't know. Remember, accumulation is a specific set of criteria that needs to be matched. Just because a chart looks as though it has bottomed out means very little in isolation. Dang. This is so key. Shows 1 hour clock. Look, it's accumulation. Incorrect. But there is a caveat to this. Accumulation does not appear over hours or minutes. It happens over days and weeks. Oh! There's your cookie right there. If you're still watching. Okay? I've been quite strong in my message on Bitcoin that if you review the signals correctly, you will not miss out on an excellent long position when the market flips cycles again. This is true because accumulation takes time. All examples you will find online and here take time to play out. I'll show you this example I posted on Twitter earlier today. Note the 8-month period of accumulation subsequent to the 3 to 6 month of reaccumulation. Play the original range right and you'll just sit there in your long position till you retire. I'm going to close this out now as there is already a lot of information to go through. In part 4, I'll take you through reaccumulation ranges to see how we can combine that with the knowledge that we've picked up here. Thank you guys. You're probably turned off, but anyone still on, thank you so much for letting me be able to share this with you. I hope this has been helpful. We're coming down to the last 4th bump tier on some big stocks, and I'm just crossing my fingers that it's gonna go down because it's too high right now. And not listen to a lot of YouTubers because that can totally screw up your thinking. So I wish you guys the best of luck, and thank you for watching Tuck Notes. I'll put this on YouTube and on Instagram. Love you guys and have a good night. Peace.